Around the world, central banks are cutting interest rates. From the US to Europe and Asia, policymakers are easing monetary conditions to combat economic slowdowns and stabilize debt-heavy markets. But what does this mean for everyday people, especially those paying off a mortgage, planning to buy a home, or investing in real estate? Let's break it all down. Lower interest rates typically mean lower monthly mortgage payments for homeowners with variable rate loans or those refinancing. This can bring much-needed relief. Reduced interest costs increase disposable income and reduce the risk of default. It also gives homeowners a chance to pay off their loans faster or allocate funds to other essential areas. For people planning to buy a home, falling rates usually increase borrowing power. Lower rates allow for larger loans with the same monthly budget, making homeownership more accessible. However, this increase in demand can also drive home prices higher, especially in markets with tight supply. Buyers may face more competition and faster bidding wars, even as financing becomes cheaper. The broader real estate market is likely to see renewed activity. Lower rates often stimulate construction and sales, supporting housing prices. However, in areas with limited supply and strong demand, prices could overheat. Investors might also return to property markets seeking stable returns, further boosting price growth. But risks remain, especially if inflation re-emerges or rate cuts reverse unexpectedly. 1. Plan for volatility. Interest rates may rise again in the future. Locking in a fixed rate might provide long-term stability. 2. Assess affordability. Just because banks allow larger loans doesn't mean you should max out. Budget conservatively. 3. Research local markets. Not all housing markets respond equally. Know your area's supply, demand, and price trends. 4. Prepare for delays with rising demand. Loan approvals and housing availability may slow down. 5. Diversify investments. Don't rely on property alone. Consider how real estate fits into your broader portfolio. Global rate cuts are creating real opportunities but also new risks. Whether you're a homeowner, a first-time buyer, or an investor, understanding how monetary policy shapes the housing market is essential in 2025. Stay informed, plan ahead, and make decisions based on strategy, not hype.